What comes after product market fit?
Once you've achieved product market fit, you've gained some traction. At this point, it's what I call getting smart.
Oh, I achieved product market fit. Now I can relax. No.
You're giving me PTSD.
What's the mindset that the founder needs to have at this point?
As they start change the approach, the revenue starts coming in.
The founder needs to have a certain, let's say, unhealthy affinity for pain in suffering.
That's not how you leave a company.
The startups that are like unicorn status, the startups that have been there for a while, usually get this right.
But I've literally seen huge organizations continuously fail at product market fit because they think they've achieved it once, they can achieve it again.
This is also an interesting thing that we are now talking about, scaling businesses digitally and post product market fit, and we are talking about cold calling.
I just like to call it like a sustainable growth engine.
What's the next milestone? Welcome to the Growth Hour, the No BS podcast about growing startups and scaling businesses. I'm Blanca.
I'm Zoya.
And I'm Alex.
All right, girls. Today's podcast, we're talking about what comes after product market fit. And I think we've talked in some previous episodes, we talked a lot about the early stages of actually setting up, figuring out go-to-market and all of that. And we mentioned product market fit, and a lot of people talk about product market fit. But I think it makes sense to start talking about what is product market fit. And maybe today we can draw in a little bit more from our own experiences that, dealing with startups that either validated or haven't validated they have product market fit and kind of what happens afterwards. Make sense?
Also how to achieve product market fit. So like the actual definition and how to be able to understand that you've actually achieved a product market fit and how to scale going from there.
Yeah. So before we get started, let's cheer, just because now that we've set the tone.
There's actually one cool thing, because I think this episode will be more interesting to those who have product market fit. So it's already a success in a way. A very big step has been done.
Yes, and I think, but that's the point where a lot of the times people think they have product market fit, but they're actually not sure. So I think for us, it's just in order for those who are watching us to understand, yes, 100% I have product market fit. Yep. Let's start maybe with that, like, what are your thoughts? How can somebody say, like, okay, yes, this and this and this, I have product market fit. What are your thoughts?
I'm opinionated when it comes to this.
We all are. We all are.
The first and most obvious one is tying in the metrics of users. So I think a lot of people, when they think product market fit, they actually think like, as long as I'm growing, it's good. But I think there are a few more things that you need to consider as part of it. So let's start with the most obvious, which is users. So in terms of how do we connect that to metrics is daily average users, monthly average users, and then looking at your revenue metrics. And the goal is over time to see that exponential growth as you scale, build some efficiencies, and so on. So that's the biggest one. But
I think that I agree, but at the same time, as a founder, who builds several startups, for me, it's harder to just look at the revenues because you're always feeling like, oh, I'm on the cusp of this. And I know that that's the reason why a lot of the startup founders, early stage, they focus on this whole, like, what Superhuman came up with, which was like about 35-40% of your users would feel really, really disappointed if you took away their product. Because, depending on the product, sometimes you really, it takes some time to get to a point where you are really able to say, what are the revenue metrics, what are the sort of, where are you going to? But I think this whole focusing on the customer is really important. In my experience, I realized that the first time I did my startup in US, we were in marketing tech, I wasn't really focused on this metric because I kept not being sure whether the people, the customers that we had, I always found a reason but maybe they're not the perfect ICP. This is actually what our ICP, we just need to get to the point where we get to the ICP. And I think I was kind of postponing that idea of figuring out and calling it whether we have product market fit.
Look, what I think, sorry, I hear you both, but I think it's also the answer. Sometimes it's not like one thing that you can say, okay, we have a product market fit. I think you're always trying to improve the product market fit. And what you're talking about is like two stages of getting to a product market fit. So first one, when you're very early stage, especially also if you're building a product that's not, that should have a lot of users, but in the beginning, for for example, if it's an enterprise solution or large businesses, you're not targeting looking for numbers in hundreds. Then I think that the moment how you determine whether you have a product market fit is exactly how important are you to those customers?
Yeah.
Are they investing in
Yes.
order to have you help them solve their problem? And then later on, I think how you are again validating if this was just an accident, that you had some really committed customers, and now you're trying to see whether it's not just a small number of companies, but if it's a large market. That's when I think you are looking for other metrics. How many users, how many of them are paying, how active they are, and also again, how much they love your product, how replaceable is your product.
I was going to mention it's a stage, and how I started it is everybody thinks product market fit is just users, and it is true. That's how you validate a part of product market fit, but a big part of product market fit is looking at the entire, there's a life cycle to it. To her point, it's knowing that, hey, if we were to remove this product, how disappointed would you be? But then there's also getting users, then there's the retention, then there's, are your customers actually happy? Are they upset? There's a whole life cycle to actually identifying product market fit. That's not just revenue or user driven.
And it's not one point in your startup life.
Yeah.
It's one thing. I have actually a funny anecdote about this. So when I was working as like a fractional CMO for a startup that was called first Super Sales, then it was called Between. It was during the COVID era, and it was a great idea where everyone suddenly thought all the e-commerce is going to be done online. So we came up with sort of an app that allowed salespeople inside stores to sell online to people, so they're able to with a phone just show around oh, this is your bag, this is whatever, the shoes and stuff, and then you're able to utilize still the salespeople without firing them, but to help users buy things online. And we thought it was a genius idea. We had a great team. We really wanted to be part of this founding team, and it was 6 of us, and we really believed it, and we had really cool clients, some bigger ones, some smaller ones, and then we were pushing until the restrictions were getting lifted, all of this. Suddenly people were well, actually we don't really want to invest in this, and we still didn't want to give up. And at that point we had to look at how long does it take us to get one client, and we actually asked them okay, you like this, but what would happen if we took this away? And we realized that it ended up being a nice to have for people. It was no longer a necessity.
Yep.
And actually then we went through almost a year process of pivoting. And I've learned the most in that part of it, because we were let's find something where we immediately test that we have a product market fit before we even build a product. It was kind of a weird thing. We used the design sprints theory kind of to framework to every week test the problem market fit in a way, and then to try and figure out how can we fake a product and see if people are going to be yes, this is what I need it now, I'm ready to pay, and to get these signals.
And how can I get it faster?
Yes. Yeah. But that whole experience actually, for the first time in my life, put such a big focus on what happens if you are not 100% certain that you have product market fit. Because once you're certain about product market fit, then I think you should go. And then you have a certain time frame where you can actually grow your business exponentially, right? I don't know if you've had any experiences where you were this is the moment, I definitely am sure that we have a product market fit. And what happened then? What happened?
So in terms of, for me, when I was working in accounting software, a lot of what I was building out was the growth strategy, but I would work really closely with the product team. So
that was with FreshBooks?
Yes, yeah.
Okay.
So we'd work closely with them, and their whole goal was constantly to enter new markets, try to localize to different markets with new features. But for me, the way that you kind of have to look at product market fit is an opportunity to also get feedback to know, to your point, whether you pivot or you persevere. And the interesting thing is, a lot of people think, they look at QuickBooks, they look at the large accounting software competitors, and they think, well, QuickBooks is huge, we should be offering what QuickBooks has. But the funny thing, and is what a lot of founders forget, is you're looking for what I like to call a niche monopoly in the market. And it's actually funny because we have the book somewhere up here, 0 to 1, that I'm reading right now, that was talking about the difference between looking at competitors versus looking at the monopoly, which is your specific opportunity in that market. And where I think FreshBooks was excellent and where they had that product market fit is they were catered to small entrepreneurs. So mom and pop shops, people who were like solopreneurs, people who were designers, you know, something that was very one person, as opposed to having a large team and enterprise and like medium-sized businesses. That was where QuickBooks really owned the market. And so the thing is, when you're thinking about product market fit, you need to make sure that you understand what your market and your pain points are, and identify what that small niche could be, test there, and then slowly scale over time.
I think that's very important. And I think, but there's one thing that I would add. It's not just a niche, it's also that the differentiator.
Exactly.
What you are offering to that niche is much better than the competitor they've already heard about, somebody has used it, maybe they even used it. And I think in this FreshBooks example, it's smaller market segment in a way that had absolutely different needs than medium companies. But I think if you really build then product for exactly that user group, and that's already something that FreshBooks obviously knew because they had their ICP defined. They understood who their customers are and what is the group they're communicating with. We had, I think with our guests in some previous episodes, we also talked a lot about it. What is it that the people, that your first customers, so maybe even if you are on the verge of finding MVP, this is something that I saw with some of the startups I worked with, that it feels like you are there, but you are testing the customers, and it's hard for you to determine. Then it's usually going and analyzing deeply who are your customers and what do they need the most, rather than building the product for some imaginative customer base that you draw in the beginning.
I agree. I think there is also this, like, what I typically notice between different, and it's like, I think it's a lot on the founder, because there are founders who are like super confident and they might not even have a product market fit, but they're like going already, you know, building out marketing, sales strategies, all kinds of things. And then there are founders who are kind of more cautious, and they already have the signals. They're like, we have product market fit, but they're not ready yet to commit to anything that helps them build a long-term strategy. Yes. I don't know if you've noticed this, but I've had a lot of founders I worked with who were like, well, I'm not going to now invest in sort of building out a marketing team. I just need one who's going to be like hustling. And they find it hard to switch to this like growth mentality. And I think we were talking about this before in one of our previous episodes, that they're not sort of ready to spend money to earn money. They're still in this sort of scarcity sort of mentality. And I think that if we're talking about what needs to happen after you've figured out that you have product market fit, besides like tactical stuff, I think there needs to be a shift in mentality where you're like, okay, if I have the money in the bank, I need to go and invest in the, I need to go and spend it smartly. But yes, you need to sort of build out some of the foundational things. You need to invest in the long-term things, because at the point where it might be too late. In like a year's time, it might be too late to invest in things that are foundational, SEO, you know, even like the messaging stuff, like value proposition stuff. Like you need to, I think a lot of what you were saying about, like, if you have a particular idea of like who your customer is or customer persona is, then you can build out different sort of value propositions, use different channels, test different things, but you need to have an idea. Okay, I'm going to give myself 6 months to build this out, test it, see results, change things immediately, not wait until like 6 months and be like, what happened? But I think that a lot of times I see people trying to have this growth hacking mentality where they're like, oh, in 2 weeks, didn't work, whatever, let's move on. We need to prove that we have a channel market fit. But I'm like, sometimes you can't really tell that you have this.
But sometimes like, especially I think the two of us worked a lot with early stage entrepreneurs, and sometimes it's really hard to always be like, no, I have to find my product market fit, and now I have to focus on this, because what you also feel like you need to focus is on getting some revenue, getting your customers. And I think especially in this B2B segment, I see a lot of startups in this early stage trying to make a sale. Never mind whether that sale is to the somebody they think is their customer or it's somebody completely different, but they're trying to get some revenue in the company. And I think I would say that I saw it going terribly bad, because at some point you have 3 completely different types of users and you are not really sure why they are using your product, just because you sold it at that moment of time, but they are not like, you are unsure what your true value is. But on the other hand, I've also seen when startups go and sell, that at some point they sell to different audiences, let's say it like that, and then they suddenly see an audience they weren't even aware of before. And that's where they understand, okay, this is something that they have in common, which I couldn't even see in the future or predict in the past or predict. So this is something where I think it's very like, we can talk about it being scientific, but I've really seen a lot of different options and things that work and work not. But I think the only thing that when it comes to product market fit that I only, unless you're extremely, extremely lucky, is when you're looking at the data and you're trying to be scientific about it as much as you can. It's not like, look, we have 3 customers, which means we have a product market fit, but you're open to you not having a product market fit, but are still, trying to get those customers and then figuring things out.
So I actually think product market fit is a long path. I don't think it's something that ends, to be honest. So I'll give an example of kind of how we went from that scientific approach to what we did to actually achieve product market fit.
Awesome.
So again, the example is FreshBooks, accounting software, so B2B. And with them, what was really interesting is part of what my role was as a growth manager, I owned the North American market. And so basically what that means is every single day I'd be in dashboards looking at the entire channel. So every channel from acquisition to partners to sales cycle, everything basically I would own in a sense, where I'm basically driving the growth strategy. So what I want to say is we're going into the dashboards, we're looking at data, we're looking at retention, we're looking at acquisition metrics, we're looking at everything to find opportunities. And what I'm realizing now is we're essentially trying to validate the consistent product market fit, which is, are we actually targeting the right people? Do we have the right type of leads coming in? We're scoring the leads, we're basically putting that feedback back into the essentially growth engine. And what we realized is we had a lot of great features. We had really good product and feature adoption, but there was still an opportunity to optimize some of those channels. And so one thing that I found was really, really successful is you would think a company at this point that was like one of, like, I think the 14th unicorn in Canada at this point, for like context, that even at this point, they're still considering whether or not they have product market fit.
Crazy.
At one point, I moved from growth to brand, which was a very interesting change, going from metrics to trying to build like a whole new growth channel. But what we did is we actually sat down with customers and we had focus groups for an hour, and we dedicated an entire quarter almost to talking to customers. And we sat and we had long conversations that were like, hey, why did you actually even come to FreshBooks? Why didn't you choose QuickBooks? And so you start understanding a little bit more about the dynamics, you start understanding the behavior, and you start understanding, hey, are we actually built for these customers? Do we have the right features? Then you start realizing that the reason you're seeing those metrics when it comes to adoption and those retention metrics, why they're going down, is because you offered a lot of different things that people actually aren't using. And when they're price sensitive, because we're talking about small entrepreneurs who are small and they have to pay for bills and they're not big enterprises, they're very price sensitive. So for them, they're constantly looking at, hey, am I getting my money's worth for the $20, $30, $40 that I'm paying every single month? And it becomes a conversation of pricing. It becomes a conversation of what are you offering? And then it becomes, are you even sure that this is the right market that you want to be focusing on? And to answer all of that, it is, because if you adapt your feature and your value prop and your offering to make sure it hits those actual pain points of the customer, you look at the rest of the market, the rest of the market isn't offering those things to them. They're offering it to everybody else, right? Like QuickBooks is, like I said, it's a much bigger competitor. They have way more to offer, but your niche is to those small solopreneurs.
So that's going to be one thing for our listeners is talk to your customers.
Customers.
I think that's one thing
All
that
the time.
all the time. Just
At any
keep
point
talking.
of your business, even if you've achieved unicorn status,
Exactly.
you want to make sure that you're still talking to your customers, because that's what we have call this like being in the ivory tower. If you're too high up and you're thinking you know best, your competition will change, but your market dynamics will dictate whether or not you actually have product market
But
fit.
what I love about this example is, okay, we're talking about a unicorn company, which then dedicated a whole quarter talking to customers. But I think this is also something that we see with startups that get to this product market fit, and then they feel, okay, we nailed it, we understand, we talked with the customers. Now we don't have to talk with the customers. Now we know their problem. And I think this is the maybe one rule. No, you still don't know your customers.
Yes.
You manage to get them in. But then now to make them stay happy, stay satisfied, you need to keep on the communication, whether through interviews or creating a community of customers or great support.
There's too much focus on looking at your competitors and not enough focus on actually talking to your customers and knowing your market and chasing those market changes.
Yeah, I think that it's also important to understand. Obviously, depends on the area, the industry, what type of product you provide. Especially, I would say in cases where you are in the sales cycles, where you have sales team, you have an opportunity to actually talk to your customer and give this feedback loop back to the business. In situations when you're going with product-led growth and you are relying on your product selling itself, basically, you need to find ways to always have that feedback loop from a customer. And yes, sometimes it's going to be scheduling interviews, talking to people. Sometimes it needs to be within, whether that's a customer support within the product. You need to be constantly gathering information from your customers, and then have a way to analyze it. How can you use this in product? How can you use it in sales? How can you use it in development? How can you use it in marketing? And I think that's something that the startups that are like unicorn status, the startups that have been there for a while, usually get this right. Because if you are not constantly having that feedback loop, eventually you're building a product that is no longer has product market fit. I think that's the idea.
Yeah.
There's this other thing, for example, if you already have, let's say, there is a high percentage of confirmed product market fit. At that point, you are growing. You're growing much faster than you did before. So your customer segment, although it's very similar, it's very different, because let's assume the first customers you got were early adopters, those whose problems were like most likely you'd share, they care most about the problem. Then you're increasing this target audience, which means you are now you're meeting people who are a bit different than your first customers. But also, if you continue growing, you're probably going to a different market. It could be a different country. It could be you were selling to, I don't know, sailing boats, and now you're focusing on motor yachts or something like that. So you're also changing
Very specific example.
Yeah, well, but I'm thinking like changing between industries or changing between specific segments in your industry. So if you are growing, your customers are changing. And I think this is something that you need to be doing once you confirm the product market fit. You can't be, okay, I have a customer segment. And then how do you move from one customer segment product market fit to another one? That's the question. How do you actually grow?
And actually, I'm curious because you have a lot of experience working with, let's say, regional startups in Serbia, and you, as one of the pioneers, here you worked with early stage startups, I think with a little bit later stage startups. Do you have any concrete examples of somebody that has done it really well from Serbia to launch then to other European or North American countries?
Well,
And how they did
I think that we talked about it in our first episode actually, but I think most of the startups that did succeed from this region or any other smaller region, I think most of them succeeded by not focusing on the region. So they had to go immediately global. And actually, most of them didn't go like, okay, what I see often with startups is like, we are global. So that means we are immediately present everywhere. No, you're actually focusing on specific markets. And what I see startups from here usually, for example, starting with the DACH region, so Germany, Netherlands, Austria. This is something where they have. That's usually where some of them start from, and then I've seen
because of the Serbian diaspora, or
well,
what?
I'm not. I think it's a large enough market. I think there is this connection of Germany, Serbia. There's this different types of relationships in the past, but there's this strong economical bond. Of course, there's a huge amount of people from the Balkan region who live in these areas, but this is what I see often. And what another thing I see is going directly to the US, which often turns out to be much more expensive that they were hoping to be. But one great example, I think, is always Fishing Booker. They were in our episode, so we had a special episode with them, but from the startups that I worked with, I think they are the ones that really nailed this product market fit approach. And I think we didn't even talk about it in that episode, but how they tested for their product market fit is a great story, because they were really looking to get feedback and get data right away. And they started with offering boats in Tampa Bay. So it had nothing to do with the region or something like that. And they didn't even travel to Tampa Bay to start the
But I think
offerings.
that's actually oftentimes, even in the US, you have a lot of products that everyone uses, but the people are not aware that those are not American companies. You know, Miro is a great example.
I actually didn't even know that.
You have Klarna, which is, I think, a Norwegian, Swedish, something Scandinavian. You have a lot of startups that actually started in the US, like PandaDoc is another thing that they...
They're from Australia?
No. PandaDoc founder is Belarusian.
Oh, okay.
But they started US first. And then they went, we actually, another episode we also talked about, but this is something that is interesting to me, that if you do it right, then you don't have this disadvantage as a sort of business that's starting from somewhere else. If you get right what is needed for this market, what's that product market fit, what's the messaging market fit, then you're not being presented as a business that has gone from from Europe to the US. I actually have a personal example. It was like a startup within a bigger company. I worked for a company that was called Thompson's, and then the product was actually called Darwin. They're now sold to one of the biggest employee benefits provider in the US. And they're originally a UK company, and they existed by that time for 10 years in the UK, and they were super successful. And then they actually went and sold to their employee benefits software, which was global. So basically all the employees of outside of the US were using their HR software. And then introduced them to, and somehow within like few months they got the biggest players in the Silicon Valley. And that's actually how I joined. I joined as the first employee in the US to lead that global team. So they separated. They had a business in the UK, and then they had a global business. And I was like, okay, it's interesting because you feel like a startup. You have to figure out complete new messaging. You have a slightly different now product. You have to figure out how to do this, globally, and what are the markets. And then obviously you're focusing on the US, and you need to create a brand and a brand narrative that this is a business that's been for a while, but not for a while in the US. But you have to somehow figure out how to present it as a US company. And it was a very interesting case. And we did the traditional stuff. We went to all the events, all the expositions, because that's where all the HR tech people went apparently at that time. But we also tried to focus on building those relationships with the key players. And the word of mouth obviously was a big thing. Obviously, UK is not that big of a difference as in the US mind. It's not the same as coming from, Serbia, Russia, wherever. But that case to me actually showed that once you have a strong product market fit, a strong pain point and need, if you do things right, you can actually grow really quickly, because within a year, we got almost everyone. I think in a year and a half, we even got which was is just the biggest employer. I'm not even sure if I can say some of these things, but hopefully nobody's watching.
I actually have a little bit of a different take, just because I come from my industries have been so random in a sense, but also very limiting. So I'll give you an example: fintech, telehealth, and HR, but payroll. So those three industries are very difficult to scale internationally. And I'll give you examples. So payroll, obviously, there's taxation there. There's all these different things that are really, really complicated. It's hard to be able to scale that. But when it comes to fintech, like I said, at FreshBooks, I actually was closely working with the team because I owned North America. The other two girls that I worked with, also growth managers, were doing Asia and European markets. And I can tell you that this is an incredibly hard thing to be able to scale because there's something we call localization. So you got to look at how different, the US on its own has different taxation based on the state that you're in.
Yeah.
So imagine how complicated it is to scale just in the US, coming out of a Canadian company to do the US.
Yeah.
Now imagine scaling to the EU. Now imagine to Asia, where it's completely different taxation. We have to localize the language. We have to change all the different types of metrics. Everything completely changes.
But it's actually not just that's true, but you reminded me of one thing, because obviously in this case I was talking about, we were doing enterprise sales. The sales cycles were 6 months minimum, but the deals were, $1-2 million, so it was worth it. But actually, our localization was to a point where we hired sales teams in the US, where depending on the region, you had to have a person with a local accent and everything, because people did not want to be sold to. They could handle British, and we had the Midwest, for example. Our head of sales, all the women loved him. And it's also HR people, so it's mostly women. And so in that sense, it was an advantage. But if you want to sell in the South States, you have to have a Southern accent. If you want to sell to Texas, you want to have a Texas accent. And it's not even the point that they don't understand, but oftentimes if you do cold calling and our inside sales teams, it has to be they didn't want to listen to somebody who had an American Asian accent or a California accent, which was different. For example, in New York and in California, they didn't really care as much, and there you could do whatever, and they were less focused on that. So it was interesting for us to learn how to sell differently to different
for me,
states.
This is also an interesting thing that we are now talking about, scaling businesses digitally and post-product market fit, and we are talking about cold calling.
Yes.
But it's really one of the things that I always, that I just recently am working with one startup that has, let's say, a very lead generation tool. But they made it so it's for traditional industries. For sales people who are not in industries that are generally very high tech, high digital. And then it started with him, the CEO. He's a very good salesman, very doing a good job and has this grit. But it started with him, doing the handling all the cold emails, different outreach, digital, but it just didn't work. And then at some point, very quickly, I must say, he figured out, well, those people are not going to buy a digital product because they are not in this digital realm. So it has to start with a short call, with some kind of
demo or
offline connection. And I remember
those people are just used to being sold to.
Exactly.
They don't need this product-led growth. Oftentimes, enterprise level companies, they're let somebody call me and tell me what this product is about.
Exactly.
That's how they work.
And for me, but there's this one thing that was interesting. Immediately as they changed this approach and they're completely bootstrapped, as they changed the approach, the revenue started coming in, and the I would say not small amounts of revenue, which is a recurring revenue. And even in larger companies, when something works, then salespeople share tips and tricks, and everyone wants to invest in sales. But it was interesting because he was pitching for some competitions, accelerators, and a lot of feedback he got is but your sales funnel is not digitalized. It can't be scaled. although you see the results, and in some way it's scaled because it's recurring revenue, the ones are even increasing. But it's hard to, and this is something that I think this region, for example, and other underdeveloped regions are missing, that once you get to this product market fit, you should invest in the channel that makes you most money, not the one that's
the shiniest
most scalable, shiniest, or we all know what would be the perfect channel, you just click and you have a constant.
And it changes also, by the way, over time.
But
perfect.
I think that it's also like specifically if we're talking about sales, because we haven't talked about this much, but there's like in the US, you have this sort of traditional sales approach, right? That it does require, it's very expensive. Good salespeople are expensive. Good people who are cold calling are also kind of expensive. And you definitely at that point need to invest in sales operations and somebody who's going to like focus on the CRM, on cleaning up the system so that you're not cold calling the same person 200 times.
You're giving me PTSD because I literally, at the payroll company I owned, I don't know if I ever told you this, guys, I ran a retention cold calling business, like the entire portfolio, 12 callers from the Philippines.
Okay.
So basically, like to your point, the language barrier, like all of that was basically there. And it's like, it's to your point, it's very expensive to have a proper team. So oftentimes companies, larger organizations will go and outsource, which is not the right approach. Because I was on the end of those calls doing call listenings and quality control and hearing the response that people had. So please do not outsource your team immediately.
And I mean, it's also like, I would say that a lot of the businesses fail because they go down the sales route and they shouldn't. They like in my case with the British startup, when the deal is $1 million, 2 million and more, you can invest and you should invest in the sales team. But even there, we had a big process of aligning marketing and sales. I actually, because even though I had a team that was in the UK, I had some people who were in Singapore. I didn't have, like only later I got like a few people who were on marketing team in the US. Actually, I worked mostly with the sales team and it was the best. We were so aligned. We would, from hanging out together at events to going, I actually was demoing the product. And I would hear feedback from different meetings all the time, because for us, there was not an infinite pool of companies. There was a very definite pool. And if you think about big companies that have a larger employee sort of pool outside of US, is a very, like, I don't remember what the list was, but it was not thousands of companies. So for us, it was very important not to break that relationship with the customer. And so we were very specific and meticulous of like how many touch points we have, when we call them, how do we try to get them. And you get creative. And for that, you need really good quality people and you have to have systems in place. Your data needs to be super clean. So that's something that I think often as well. Another tip for our listeners
Please
is
invest in a good CRM system.
Yes, and clean it regularly.
But that startups and even VCs especially, they want every startup to be the unicorn potential. And sometimes during the looking for a product market fit, you realize that you might not have the unicorn potential in the sense of that you will scale.
But you can still be a profitable business.
Exactly, but you can still build a profitable business. And I think at that point, I think the founders should really think hard what's their next step. Because if they are going, what I see happening is if you have like a potential profitable, sustainable business, rather than extremely scalable startup. But if you continue seeing yourself as this scalable startup and you can start going to meeting investors, VCs, what you get is people telling you you're not good enough, which is very bad for the motivation. And if you at some point sit down with yourself and look at your numbers and say, okay, these numbers are really good. I'm making money. I got already one investment, but I don't have to get another one because I can make it into a sustainable business. At that point, you become a sustainable business which can grow, which can even be scalable, but it might not be the 100x, doesn't have a 100x potential. And I think that's a very important conversation for every founder to have with their team.
That's actually a good point. I have a question to you guys. Like, so we were talking generally, like what needs to happen after product market fit. What's the next milestone? What's the thing where, so like, because product market fit is sort of a milestone in a way where you figure out, okay, I have product market fit. What's the next thing? Are we talking about, you need to have 2 million ARR. There should be 20% month-on-month growth. What is it that we would say is the next milestone that you need to, like, what's your North Star at the point?
I actually who wants to talk about it.
I had this one story I was going to quickly just mention. It's a little bit different from our regular kind of SaaS and B2B, but I wanted to give an example of an e-commerce business that I was working with really closely. Like I was running their retention portfolio and I worked closely with the growth. So every Monday we'd have our executive meetings where we would sit down and run through all the dashboards. And they were at a point where they had incredibly good product market fit in Canada. I can't talk about I ended up being a contractor for them, so I can't go into details, but who they were. But they had incredibly good product market fit in Canada. And then through pressure, they wanted to then scale to the US. But being in the numbers, and the second milestone that I wanted to bring up through this example was knowing your business and understanding your numbers and understanding your profit margins. Because especially if you're e-commerce, it doesn't matter if you're e-commerce, if you're a B2B SaaS, you need to know your numbers and you need to know what your business can actually withstand when it comes to scaling. Because oftentimes they think, okay, the next steps, whether it's investor pressure, whether it's whatever reason, they want to scale into the US because of economies of scale, because they have bigger opportunity. But the reality is there's more overhead costs, especially if you're e-commerce, especially if you have cost of goods sold, especially if you have all these inventory that you're holding on to. So these are things a lot of businesses forget, that there is a huge cost to your business to localize, to bring on consultants to do the market research, to bring in the person from the US who handles all of your operations. Like that is a huge cost.
All the legal ops, everything.
Legal, like it's incredibly costly. So oftentimes that growth that you see to a new market, or even it could be to a different product category, has immense implications. So a lot of these businesses that I've actually consulted on do that mistake where they think, I scale, now that I've had product market growth, they take that almost like energy and they start flinging it out. They're like, feature product to serve it, like everything, start throwing things out. So it doesn't just mean like scaling to a new market, but I've literally seen huge organizations continuously fail at product market fit because they think they've achieved it once, they can achieve it again. And then they start throwing out products that are not aligned.
Market. Do you think like they start doing it again at a different market or in a completely different product?
Both. Okay. I've seen in the same market, they threw completely new products that are not relevant at all to what the market's looking for. And then going into new markets that they can't sustain like profit margins with, because they don't, like, again, it all goes back to that milestone, which is after product market fit, don't get confident. Like don't have an ego. You need to, at this point, you're now trying to achieve profitability. You're trying to do growth sustainably. And once you have, and this might be controversial because I know a lot of founders don't think this way, but coming from a data background, and I worked in data analysis and business strategy and planning, I've seen so many portfolios tank because of this. You need to know your numbers and you need to have a strong basis and you need to have a maintenance. Once you have maintenance in one market, one product category, one area, then you can start reinvesting some of those resources, money into a new market, into newer product. And I'm not gonna mention which companies, but I've seen enough that have actually tanked because of this exact reason.
So what we are talking about is that we want, once you get to the product market fit, you should ensure that you are safe there. Like that everything is working, that you have
whichever growth, product-led, sales-led, marketing-led, doesn't matter. There's so many different.
At least at some point it can get in a way as automated as it can be and working.
I just like to call it like a sustainable growth engine. Once you have some sustainability and you're in the green, because so many of these operate in the red for such a long time, and I think, what would be really smart? Let's go to the US. Let's destroy everything.
I understand that point, but I have to like do a counterpoint at some. I think that sometimes growth can be really messy. And I think that's something that you founders and everyone involved should really care not to be that messy. And should worry if it's all working correctly. But at some point, I think it can't be avoided. Like if you are growing from, let's say, from 10 people to 50 people in several months, it's a mess. It's a completely different company. Then if you're going from 50 to 300, that's another completely different company. You need different people, different processes, and it has to be, it has to be messy.
It's organized chaos.
Yeah.
Try to balance between doing things and
Yeah.
testing things and trying new things, but also sustaining something. Because if you're just depleting cash and you're just trying different things, the same thing with channels.
Exactly,
then
but I'm just saying that sometimes even that mess, when you're inside of it, it can look like, oh my God, everything's wrong. We should hit pause and
Yeah.
everything. But sometimes when you look at, and of course, things can go terribly wrong.
Yeah.
I've seen it more often than I didn't. But when you are in this high growth phase of a business, and if you are going towards this, let's call it, oh my God, I'm saying it for the fourth time, unicorn path, when you're going towards it, at that point, you have to get comfortable in it being a mess. And sometimes it's definitely wrong, but sometimes it's just something that you have to do.
All right. In order to wrap up the kind of this whole area and chapter, last thing I want to just quickly for all of us to talk about is what's the mindset that the founder needs to have at this point. So like usually you work in a certain mindset to get to product market fit, and then you need to, as I mentioned before, you need to kind of shift gears and adjust, hire a different maybe team or like expand the team. What's in your experience sort of the main things that need to be changed in the mindset of a founder, like, and the team?
This is maybe a little bit controversial, but because I come from an LTV and a retention background, you guys are like, of course. When it comes to growth, I think the next stage is actually considering re-engaging those users that you already have and using them to your benefit to create brand advocacy and creating different channels that are organic channels. I'm not going to go crazy into detail, but a lot of people at this point, they jump to start doing paid ads, throwing money into channels that are very expensive. And that's fine if you can validate that it works for you. But I think oftentimes when it comes to that next stage, once you've achieved product market fit, you've gained some traction, at this point it's what I call getting smart. It's start looking at those different channels and focusing on the ones that actually you can optimize and grow with. And I've noticed an experience working with very different clients that retention and loyalty needs to be one of the key channels.
I think that like one thing that I was getting to, because I always question why some founders who have good idea and even maybe have product market fit don't really achieve growth. Why don't they? Just the other day we were talking about some startup where you said that the founder just got tired. Got tired of growing, of trying to grow the business. And probably one of the best sort of ideas I had in the last year or two was from my favorite All In podcast, obviously, where they're talking about that a founder needs to have a certain, let's say, unhealthy affinity for pain in suffering. And maybe it doesn't have to necessarily be affinity, but it needs to be something you're comfortable with. Your comfort is in discomfort in a lot of ways, where the moment you feel comfortable and everything is like, oh, I achieved product market fit, now I can relax. No. Oh, I achieved sort of certain revenue goals and now I can relax. No. There is actually, there's no relaxing. And when we're talking with Fish and Booker, and the guy was saying, like, to this day, like, they've been about it for 10 years, they still feel like they're failing every day. And if you think about it, we listen to it, we hear it, and we think like, oh, okay, well, you feel like it's so hard. Like, I know, like, I now have an offline business, and to me, I still every day think, why am I doing this to myself? Why am I going through this suffering all the time? Because you feel like I'm going to achieve this. I'm going to become a unicorn and suddenly I can relax. No, because at that point, it's actually even more work. It's even worse. You have so much pressure. You have people that are dependent on you. You have investors that expect you to grow. The pressure just keeps building and building. So I wanted to actually talk about this because if we start talking about growth, actually, that's where the hard part starts. People often think that coming up with the idea, getting to product market fit and this stuff, that suddenly then, these are all these fun, wonderful stories where suddenly it was propelled to success. But no. Actually, that's where you need to, get your hands dirty and start
Especially
working.
If you have employees and people to pay, then it's a completely different.
But I think like if you're an entrepreneur, any type of entrepreneur, it's hard in every phase. You constantly are moving from one phase to another, and you are trying to survive one hardship,
100%.
you get on top, and then immediately a new crisis
That's why
starts.
not everyone does it. That's why.
Exactly, but I think it's the
But if you need to
entrepreneurial
know
thing.
going in, because if
Exactly.
you're a first-time founder, you start thinking, if this is this hard, maybe I shouldn't be doing this.
But wait, have you ever met a founder with whom you talk? For me, not that told me this was as hard as I thought it will be. Everyone says, "Oh my God, it was much harder than I thought it will
Yeah.
be," and if I knew how hard it was, I'm not
wouldn't do
sure
it.
I would do it. So in that sense, I think it's a normal thing. I think, but I think I completely agree with what you said. I would just slightly change it to that I don't think every founder needs to be ready to be all the time all in.
Yeah.
Because it also depends on your life stage,
Yeah.
on your own motivation, on what you want to achieve. So I think that if at some point you did the product market fit, then you're moving into the growth stage, and at some point you want to relax a little bit and
Then you
stop
find
worrying.
a different CEO, yeah.
You either find a different CEO, or you find a model in which your business doesn't have to grow as much as it can, or you sell the business. But this is, I think entrepreneurship is very hard, especially starting startups.
Yeah.
But I think I would just not like to discourage people on us
I'm
telling us it's very, 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 very hard, because there's an exit once you get tired. The founder that we just were talking about yesterday or the day before, I think that's not how you leave a company. Like when you raised a lot of money and got some, and you are in this deep tech space. If you're entering the deep tech space, that's when you know it should be hard. It's really hard. It takes long from a lot of different aspects, which are beyond like marketing. But I think in many other situations, there's a way for you to exit. You can hire a new CEO. One of your co-founders can step up. You can sell the company. You can find like so many ways.
But I think that's also the important part to mention, because I think for founders, it's so hard sometimes to accept that they need to step aside. Sometimes they are not aware that they're tired, or they're no longer, like they were a good starting founder, but they're not the one that's going to take the company to like really grow. Yes. And like a good example of like Uber. So Travis, like he was kind of ousted in a way, but there was a need, like he was not a good fit at that point for a company and for what the investors want and stuff. Who knows where Uber would be and what their IPO would look like if Travis was still there. Maybe it would actually been better. I don't know. But those are decisions. And I've had several startups I was a part of where there was this change in leadership, because they realized that the CEO actually would much rather be a CTO because he was a technical founder. And they need somebody else to run the business because they need to grow faster, and he's not able to catch up, and he doesn't maybe want to. He doesn't want to focus on these things. So I think it's important to know that once you achieve product market fit and you start scaling and you start growing, you need to A, be prepared that it's going to be hard, and then B, you need to know when to either step aside or change the model in a way where you have somebody who is able to be in the trenches all the time and grow the business, because at that point you already invested a lot and you have a lot of dependence. It's you know, if you're going into it to build a great business, you need to do everything possible, even if it means you still have to step away.
We're talking about guys in the US that like refinance their homes 3 times in order to be able to run businesses. That's the like psyche behind the risk.
But to that point also, I think the founder might not grow as fast as the company and the company's needs, which often happens. But also another thing, like the rest of the team might not be suitable. So I think the team that gets you from to the first users to the product market fit might not be the same people that will get you now to operate, to create like a process around it. Or for example, you got to what you just mentioned. Now, if you think that after the product market fit, you should focus on organic channels and creating brand loyalty, that might be a completely different team that was helping you get first users when nobody knew who you are. So what to do then? That's a big topic.
That's a topic
Next
for
time.
another podcast. So I think that actually there's some really good tidbits we discussed today. And thanks so much for sharing different anecdotes from your experience and your experience.
And your experience.
And my experience, yes. So I think that on that we finish our episode. Thank you so much, and
Cheers to
We
product.
did it.